$547 million worth of net income year to date, and so that's approximately $556 million better than plan or ahead of plan. And then I'll touch the operating cash flow. So as you would expect with those favorable results on the income statement, you can see that we have $634 million more of operating cash flow that went directly to pay down debt. In terms of our investing activities, we have quite a few, as Chip was mentioning, major construction projects underway. Because of the sequencing and timing of those construction projects, we're favorable, meaning we've had less overall investing spending of $500 million. I'll tell you those are simply timing issues associated with the staging of the projects, and the plan for 2015 includes the full spending for those projects. So I would call that a timing issue within the plan, but given that timing, we have taken that incremental money that we had and used it to pay down debt as well. And so overall, you see that in terms of the financing activity, which is over $2 billion less than what we had anticipated. And then when you look at the statutory debt at $23.8 billion, so over $2 billion less than what we had thought in the plan, again, driven by these favorable operating results, the timing associated with capital, as well as bringing down our overall cash balance. So I'll pause if there aren't any questions regarding the year-to-date results, then I'll move directly in, with your permission, to the budget presentation. So in terms of the budget, as Bill said, we align all of the activities within our business plan around the strategic imperatives, ensuring that from a rates perspective that we were providing rates as low as feasible, in line with least cost planning and overall operational efficiency. From a debt perspective, living within our means, and then I'll show you the investing areas where we do focus on the overall asset and operating portfolio, as well as our stewardship commitments. So some of the key assumptions that you'll see within this budget are that we do live within our means. I'll show you the revenue trajectory and how we align our overall spending to those revenue projections. This does have a plan that achieves the $500 million in O&M reductions. It does include a slight increase in debt for the fact that we do have the nuclear construction going on at the same time we have the other large construction projects, so roughly $1 billion. I'll show you that in the plan. But we're also managing our overall long-term debt trajectory. I'll show you the trend of that over the next several years. And then this plan does include some economic growth, although relatively modest economic growth, roughly a 1 percentage point growth rate. But I'll show you those numbers.